experts predicted, now it's here. The Bank of Canada slashed its key interest rate by 0.5% this morning. But does it mean your mortgage will get cheaper, and how it will affect home ownership here in BC? Peter Sashecki with Everything Financial joins us now this morning. Good morning, Peter.
Good morning.
Okay, let's talk about this interest rate cut, 0.5%. Some people thought it might only be a quarter. A lot of people hoping it would be more than that. And they did settle with 0.5%. Your response to that?
Better than nothing.
Yeah, for sure.
We're still, if you look at all the economic factors and all the economic forecasters who talk about it, we're still probably about 1.5% behind where we should be based on inflation. They're moving the rates slower, and that's dragging the economy, but it's still in the right direction. So maybe now that'll be the push to get some of those people in the home ownership area in the lower end of the spectrum to maybe jump into the market, because then you have, not a big financial term, but the butterfly effect. If someone buys someone's house in the lower end, then they technically go buy something, usually the next level up, and so on and so on. So it does have that slow ripple effect to help the economy.
I imagine there's a lot of people out there, too, who maybe are thinking about remortgaging, or they have to renew their mortgage, and they may be sitting like, do I lock in, or what do I do now? So what are people supposed to be doing in this situation?
There's a lot of people, Carrie, whose mortgages are coming up for renewal over the next year. As we've been saying all along, still hold tight, go short term. Even the variable mortgages, which a lot of them are prime minus some element, whether that's 1 or 3/4, are now looking more attractive because we've got this downward trend in rates that look like it will be continuing for quite some time. So you definitely don't want to lock into that 3 or longer rate. You really do want to look at the short term, and don't always look at the number. The number's misleading.
Okay, I need to figure out what you mean by this.
Yeah, when it's a 1-year mortgage, you may think, oh, the 1 year is 6 and the 5 year is 4.5. I'm going to take the 5. Well, no, the 1 year is 6, but I'm just using that number. Yeah. But the actual cost over that year versus a longer term mortgage is insignificant. Look at what the fees will be to get out and what the rates will reduce by over that length of time. So you've got to look at the bigger picture. A mortgage is not a product. A mortgage is part of an overall financial strategy. So you got to look at all the elements. Don't be fooled by the number in the sales pitch.
It might be better just to lock in for that 1 year and then see where the interest rates are, because they might be much better down the road.
That's right.
So we get the feeling that they will be continuing to drop, that we're not really on track to where we need to be yet.
We're not even close to where we need to be yet to do what it needs to be for the economy, but also where the rate should be in relation to where inflation is. So they still have to come down quite a bit. What could affect that, though, is if something happens that we can't predict that causes inflation to go back up, then they might have to hold interest rates for a bit to keep that hat on inflation. But at the way it's going right now, you're going to still see quite a few more reductions based on where inflation is.
Okay, so with this rate cut then, I mean, it's good news if you have debt like a line of credit, for example, or if it's your mortgage. But also, what about credit cards and that kind of, does it impact the interest on the credit cards, or we still got to pay that off at the big, high amounts?
They're ridiculously high at some ridiculous amount, but possibly it frees up some money on a line of credit, or frees up some money on your mortgage if you have a line of credit mortgage or a variable. And if it frees up some of your cash flow, then it can give you extra money to attack the high credit card.
And you got to pay that off.
I'm saying 19%, and I think I'm in a dream world when I say 19% sometimes, but it gives you a little bit of extra cash flow to attack other debts that maybe are a little on the steep side.
Yeah, no kidding. Well, a lot of people are relieved about this interest rate cut, that's for certain. 0.5%, nothing to sneeze at. Peter Sashecki joining us this morning. Thanks, Peter.
Thanks, Carrie.
Thanks for coming in.